Welcome back, Alpha. I hope you guys had a great and fantastic week. The markets are closed for April the 21st, or the week of April 21st. And let's get going into what happened this week. So we saw Monday was kind of chill. We didn't really gap too much. So then we just kind of traded lower, kind of hung out in the middle part of the day, kind of lower end, kind of retesting into the blue zone that we got above last week. So we had a quick retest and quickly moved higher. Nice gap up Tuesday morning. After that, market basically just sold right off. First the first hour, then we didn't do too much after that on Tuesday. Kind of just hung out, went sideways a little bit. Very slight trend higher through the second half of the day, but not a whole lot going on. Wednesday, nice little gap down. We're gonna get into some of the earnings stuff and what kind of was impacting some of these gaps throughout the week. But nice gap down and then traded higher. Didn't get back to, Tuesday's high by any means, but got back to even on the SPY and then kind of just flattened out with a little bit of sell down at the close. And then Thursday morning, nice little gap down. This is going to be mostly Tesla's earnings. Wednesday is mostly Netflix earnings, but this Thursday morning, nice little gap down, traded higher for the first half of the day, and then rolled over pretty hard in the last hour and a half, 2 hours, except for like the last 30 minutes, nice little buy up. But yeah, pretty much on the live stream, like right here, we just started watching it just roll over. Usually, the middle part of the day when I'm on the live stream is not the busiest time for market action, but it definitely was on Thursday. Friday came out, not much happened. Pretty much a flat open. Traded a little bit lower, took out Thursday's low, and then bounced, got back above this blue zone. Like I said, this blue zone's very, very choppy, very hard to kind of go through, whether it's you're trying to break through it in the bullish direction or break through in the bearish direction. So the market had a really hard time getting through it. Wound up making a push higher, then a little bit of a pullback, and then it'll pop right there at the end out the week. So that's about basically the ebb and flow of how this week went in the stock market. A lot of earnings started kind of coming in, kept coming in this week. We got into Netflix, Tesla, kind of mentioned that a little bit already. This next week's gonna be big time, so we'll get into a little bit more of that here a little bit later. Okay, so taking a look here at sector performance throughout the week, we can see the energies just did not have any luster. Basically just down every day. Just not really feeling it. It started out the month pretty hot, and now it's kind of having some of that pullback from that OPEC cut that happened. Basically to start out the month, the first day of April. But so it's had a little bit more of that comeback, retest, and I would not be looking to be extremely bearish on energies, but they are having that little bit of a comeback on that huge gap up that they started off April with. But XLC Tech also weighing on the marks this week. Materials really weighed on the market on Friday. If you want to see what I'm talking about, go check out some lithium stocks. Chile basically nationalizing the lithium industry there because it basically is their country's demand. So huge ripple effects there in the XLB. Discretionaries, XLV, healthcare, XLI kind of in line there with the market throughout the week. Then you got utilities, real estate outperforming, with financials and staples at the top end of the week. Now you can see that staples actually exploded higher, really going into that Thursday close, and then obviously held it Friday. But yeah, we're seeing a little bit more of that risk off rotation, or at least just not a risk on, because we've been seeing tech, XLC, XLY, XLK, that kind of stuff. They have just not been having the leadership over the past 3-4 weeks that they were in the first half of March when we were seeing regional banking issues. Taking a look here at week over week options chain, kind of what we got going on out there and what really kind of changed this week. We can see here that, we just lost a huge expiration. The April 21st expiration obviously is now gone. The next two big ones out there, and we've seen a lot of options kind of come into these is going to be May 19th and then June 16th expirations. Now they're not nearly as big as April, and March was a huge one. Huge one was back in March. So I would say we got some declining options contracts, like open interest kind of going on right now in the marketplace. But one thing you notice, look at all the bar charts. So the bar charts, if you've seen this over the past couple of weeks, I've been showing this off. The bar charts are the week over week activity. The line charts are the total activity. So it's not just the week over week stuff. It's the cumulative. But if you look at the bar charts, all of the light orange or tan colored ones, They are all the puts. And you notice all the expirations. There was a lot, and I mean a lot of put buying going on this week. And I really kind of was double checking all the data points just to make sure I was getting them right, because we were seeing some huge outperformance on the like put buying on contracts, not just in short term, but also long term. Look at out like October, a lot of put buying. September, a lot of put buying compared to like relative to calls. So we hadn't seen that before. Even the Jan 24s, a lot more put buying out there. A lot of bearishness kind of came in, even though the market wasn't extremely bearish this week. We are seeing a lot of bearishness kind of come in. Okay, so this is going to be the structure for this next Friday, April the 28th. We have a lot of options there at the 416. There's a lot of calls, and then we have a lot of puts at 410. I am kind of one to think so we actually push higher this early this next week, and then we see some selling come in the second half of the week. I'm going to get into a little bit why towards the end. Here's the next big expiration, May the 19th. Obviously, we have a huge put wall here around 400. But, you know, that's still a little bit over a month away. We'll see what happens between now and then. I think the upside's pretty limited, but I have a hard time believing that the market really gets below that 400 level between now and then. But, I mean, I could see it happening. And then here is that second big expiration out there, that June 16. So, yeah, we're seeing a lot of spikes out there, a lot of open interest still out there for that May and June timeframe. So, yeah, we got a lot of puts and calls here sitting at the 420 in the June timeframe. So we'll see what happens here over the next couple of months. But yeah, there's a lot of still just a lot of bearishness out there still being accumulated. So if you are buying options, okay, and you're trying to protect yourself, trying to even trying to be bullish, probably trying to be directional anyway, stop buying zero DTEs. There's 0 days to expiration. I mentioned it in last week's videos. Go out farther in time at a 6-month minimum. And right now that's about October at the minimum. Okay. And the reason why is day traders are losing $358,000 per day gambling on 0-day options. Guys, you're losing money. Stop doing it. Okay. We haven't really gone anywhere in the market in the past like 10 months. We're still like around the 400 level. We first got there like April, May last year, which is when 0 DTEs were actually introduced. So stop betting on 0 days to expiration. What you should be doing, and this is like this for any strategy that you kind of do, if you're not making money with it, flip it, okay? Flip it. Do the opposite. With 0 DTEs, you should be selling options, not buying, okay? So if you want to know why you're losing money, this is probably a big reason why. Stop losing money. You're not here to lose money. You're not here to gamble. You're here to make money. If you want to gamble, go to Vegas, go to Atlantic City, go to Macau, but start making money. Stop losing it. Taking a look here at this Fed Watch tool. For May 3rd, we are pretty much locked into a 1/4 point rate hike, okay? It's going to go up. Basically, the market's pricing a 1/4 point rate hike. What's interesting, what I'm not going to be showing off like every week, but what was really interesting when we were looking at this Friday on the live stream was how much going out, the market is now starting to price in another 1/4 point rate hike in June, right? In June. So we're looking at June here. And over the past week, it's gone from a 16% probability to now 22%. It's over 20% now. So it's really starting to creep up there. And even July, if we look at July, that the market's really starting to hold up there a lot higher. So it's going to be real interesting to see when we get to May 3rd, what's the Fed going to say? Are they going to come out and say, hey, you know what? We're going to go higher on interest rates. And I think that could be a big time risk in 2 weeks, okay? We'll talk more about that next week because that'll be the following week's game plan. So the Federal Reserve balance sheet data that came out Thursday after the bell came down a pretty good amount, about 3%. We're going to see if this continues to fall off next week. I was kind of suspecting last week when that number came out a little bit higher than what I kind of thought was going to happen. Wondered if a lot of that had to do with padding of the end of quarter balance sheet. Okay, so I think a lot of financial companies out there were padding end of quarter balance sheet. And now they're taking it off as, you know what, we don't have to show the balance sheet anymore. We don't need the cash from the Fed anymore. So we'll see if this continues to drop off. And I would imagine it probably does start to, because the Fed has mentioned that they do want to get back to shrinking the balance sheet. The VIX traded a little bit lower this week, not crazy. It definitely was breaching that 17 just about every day this week. I mean, I can see it go a little bit lower. I don't know if it'd break this past Wednesday's low early this next week, and then I'd imagine it probably shoots back up. And I wouldn't be surprised actually if it did gap up on Monday, but just expect it to probably just hang out down here. All right, so take a look here at the VIX on the bar chart and the S&P 500 there on the orange line, okay? So what you see here, the 17, that was very important. This is what we've been breaching here pretty much this entire past week on the VIX. And what you can see right before we started major selling down the market. Now, this is not the all-time high. The all-time high was actually a few months prior, back before the tech bubble crash, right? Leading up to the tech bubble heights. And we breached the 17 level, okay? So we breached the 17 level, then immediately reversed course and got back above it. And then obviously that pretty much went on for the rest of that bear market. Now, I wouldn't say that's an exact representation of where I think we kind of are in this bear market cycle or whatever. I really think we're kind of more at this spot right here where we had a pretty good run up on the S&P 500 and we're kind of flattening out. But the VIX continues to drop. You know, even you notice here week over week, the S&P 500 actually starts to drop. So we'll kind of see what happens here over the next couple of weeks. But we're going to have some major catalysts here this next week with some earnings. And then the week after, we're going to get some major earnings and FOMC on that first week of May. So we'll just have to wait and see kind of what comes in. But I think we're probably at the lower end of that spectrum on the VIX. And this is another good one to kind of point out here. This is back in 2008 during the Great Financial Crisis. And what you can see here is, well, the VIX breached 17. The week later, we were back above it. And basically that was the top of the point, you know, kind of where we were at, that little hump that we had. Then basically we then started a massive downturn. So I would say right now is not the best time to be looking to be getting in bullish. I would say right now is probably a good time to just be a little bit more cautious on the bullish side. Even leading up to that breach of the 17 on the VIX, we saw the VIX go from 34, right? The numbers over here on the right side, you know, about the 34, 35 level, and it just got crushed for about 2 months straight. And then, I mean, you saw what happened, right? We all know what happened. So it's just not the best time. Right now is probably the better time to start to be looking maybe a little bit more bearish, protection, you know, go out, hedges, stuff like that. Don't be doing those 0-day to expiration options. Dang it. Stop losing money, okay? Protect your portfolio. Look a little bit more long-term. Long-term, you'll sleep better at night too, I promise. Take a look here at the dollar, the DXY. It was basically kind of flat over the week. I mean, we didn't really do too much. We kind of just traded sideways. Going to see how interesting it's going to be, you know, here in the next week or two, especially in 2 weeks, because we're going to get the FOMC meeting. See which way this kind of breaks. You know, is it going to rally or is it going to continue to break down? If it breaks down, obviously that's looking bullish for stocks, or it has upward pressure for stocks. It doesn't mean the stocks will go bullish necessarily. But if this starts to rally, then obviously that's going to put downward pressure on stocks. So we'll have to see which way this kind of breaks. But right now it's just kind of moving sideways consolidation direction. U.S. 10-year yield, nice little pullback. Obviously had a nice rally last week, continued even this week on Monday. But had a nice little pullback for the middle part of the week. End of the week kind of strong with a nice little bounce off the moving averages, continuing. Probably just to look to push higher going into next week. 10 and 2-year inversion yield, getting kind of boring in here. Not really doing too much. Still just kind of consolidating, but it seems like it wants to break down, which means, I'll be pretty honest, I think we're about to see it erupt into the bullish direction here. So we'll have to see what happens, but it seems like it's getting kind of compressed and looking like it's going to break higher here probably pretty soon, probably the next week or two. GLD gold seeming a little bit tired. Okay, it really does. It seems a little bit tired. It seems like it wants to fall off, but the dollar doesn't really seem like it wants to break out higher. It's going to be really interesting to see how the dollar and how the gold and even silver are going to kind of play here over the next 2-3 weeks. Gold just seems a little tired right now. It seems a little tired. HYG, the high yield corporate bonds. It was a weird week. These guys were just all over the place. Definitely down week over week, but it was just like every day it was just super gappy and not much movement during the day. Not like last week. Like last week there was huge movement and held basically throughout the days, but I mean this week it was just gap. It moved and then it came back to where it opened. So it was just really kind of a weird week. But they, the bonds are still have been underperforming the stock side of things for a little while now. I mean, it's been a little while. So even looking here at the LQD, not having the best of weeks, not having the best of weeks. So not really seeing the risk on coming in here on the investment grade side for the bonds. Alrighty, talk about two stocks that had earnings this week. Probably on the bigger side, besides a lot of the financials. There was a lot of stocks that had earnings this week. Can't get through them all. Netflix, though, had a nice little gap down. And I like this retest. It had a very nice retest on Thursday. Got back up into the 10 and 20 moving average. Had a nice little gap down on Friday. Tried to trade higher. Watch out for Netflix. If it doesn't get back, probably up over 335 and just kind of hovers around this 330 level here for the next like Monday, Tuesday, maybe Wednesday. Watch out for this thing to probably start to fall off and trade lower. Probably a really good spot to look to be getting bearish, maybe around 330. I'm already in bearish, full disclosure, but I was bearish, back up here. If you're on the live stream, you know that, I got in basically right here on this day. Just kind of lucked out when I was just looking through some stocks, came across it. So, and I was really liking to be bearish on that level from this basically head and shoulders action that happened back here between January and February. But yeah, I mean, it's just a nice little gap down. They missed about 500,000 on subscriber growth, I think is what it was. They still are having issues with like password sharing crackdowns and stuff like that. So I think Netflix might be a pretty good bearish play here going forward. At least technically looking pretty good to be bearish. Everybody's favorite stock, TSLA, at least, all the retail traders' favorite stock, TSLA. Oh, maybe a second favorite. Apple's probably first. This sucker, well, first off, their earnings, they're starting to have margin contractions. And this is typically what happens of any business, right? Any business, they have a proof of concept, they have a huge growth. That huge growth then kind of dies out. They kind of start to mature a little bit. And then competition comes into the market space, which we've seen over the past year or two with a lot of new manufacturers having their own electric vehicles come to market. And now we are hearing from TSLA that they are contracting the price. They are bringing down the price. I'm sure a lot of us have seen this, which is contracting margins. This is very important. They are going through a margin contraction cycle. And it's not that TSLA is not going to be around, but they have been living in the world of really high margins, and now they are going to go through a margin contraction environment. This is going to continue to happen until they just get to the industry standard of whatever the margin kind of is. So yeah, they're just going to continue to kind of hemorrhage and kind of bleed out a little bit here. And I think I saw that Kathy Wood actually gave them an upgrade up to like $2,000 a share, which I think would put their valuation at like $5 trillion by 2027. And you know what? You can come up with whatever you want to think about that. I think that's lunacy. But anyways, what I'm kind of looking for here is I like how it snagged this low back from March 13th. 2 days in a row, didn't hold it either day. What I'm really looking for is a push higher to about 180. 180 to maybe like 185. In that area, I'm going to probably be looking to play it bearish. And I'm not going to be doing it with zero DTEs either. I'm going to be looking to play it bearish for like the next few months. That's a big deal. The fact that they're going to continue to get hit on margins. And Elon Musk even said it on his conference call. He said it. He's like, we can continue to pull the price down on vehicles and we'll still be fine with margin. Well, that's because they have so much margin room, but that just means that they're going to continue to have margin contractions. People are going to continue to revalue and lower the value actually of the stock as it continues to go forward if they keep dropping the price of the cars because they're just losing margin. That's it. Okay, so taking a look here at the Qs. So obviously the Qs were really strong during that first half of March when, the regional banks were having major issues. The second half of March up to the recently, like today, outside of like 1 or 2 days, they really have not been strong. I mean, big tech has not been strong. It's been very top heavy. It's been like 5 stocks that have really kind of been leading the market. 10 stocks have been holding the market. So it's getting really hard in the Qs area because they're starting to kind of top out here. And we got major tech earnings here this next week with Microsoft and Google on Tuesday and Tuesday after the bell, and also Amazon Thursday after the bell. And then we will have the week after that AAPL. So here are the next 2 weeks. We're going to really find out what the Qs is made of. And I would even imagine, even if there was a gap up on one of these tech stocks, they're probably going to get sold off. People are going to lock in the profits. I don't think I would look to be bullish. IWM looks like it's probably just going to continue to break through this uptrend wedge that it kind of had, just kind of forming in here. And it looks like it's probably just going to start to slowly chop and break it down. That's just kind of what I'm thinking. The 2 times that it actually tried to get over this 179 level, it didn't hold either time. We actually gapped above it one day this past week and just sold straight down. So it's not really looking good for the Russell right now. DIA, nice little pullback here into the 10 moving average. I think we're going to get one push here off the moving average, probably just push higher early this next week. And that might be roughly it. Remember, because Microsoft's going to report and they're in the Dow Jones. So probably not going to be huge uplift there on the Dow Jones. Equal weighted SP 500, definitely not sure. I don't know. Probably just looking a little top heavy right now. Just can't get through some of this like previous, this support that it broke down. Kind of just been retesting into that line, right? This line right about here around 146 or so. We can see that we try to bounce there. We bounced there before. Basically, we're just retesting into that this week and not getting through it. So it seems like it just wants to break that down and probably does happen this next week. All right, so bringing all that back to the SPY, I'm watching really one thing, and that is going to be bullish activity as we go into Tuesday's close, because that's when Google and Microsoft report earnings, okay? I think we'll push higher Monday, Tuesday. I don't know how high we get. I'm not going to be looking to be bullish over Tuesday's night, okay? I'm not going to be bearish, but I'm not going to be bullish, mostly because I can see us gap down on Wednesday. And if we do gap up on Wednesday, I think it very quickly gets sold off, especially if we get up into that 416 to 417 area. I think we will sell off from there. Anyways, just a little bit of a hunch, but it seems like we just didn't want to break through this blue box zone currently. And I think since we just came into that 10, exponential moving average, I think we're just going to push ride that just one more time higher as we broke the support of this up channel. The last time we did that back in January to February, we broke down below it and we had a couple days of bullish action and then we broke down. So even if we don't get up to over this past Tuesday's high, maybe we get up to like 414, 415 and then we roll over. Okay, but Tuesday close is probably as long as I'm going to go being bullish with a position I already have. And then after that, man, it's going to be really tough to be bullish. That's kind of what I'm thinking. Alpha Hunters, y'all have a great weekend. Take care.